And as I alluded to a few minutes ago, it is earnings season. Banks are always the first out the gate here in the UAE, and we have RAKBANK numbers this morning, record profitability for 2025. Very pleased to be joined in the studio by the Group CEO, Raheel Ahmed. Raheel, it's lovely to speak to you. Good morning.
Good morning. Pleasure to be with you again.
Let's take the headline number from 2025 for you. Annual profit up 26%. What has driven that profitability?
Thank you, Brandy. A very broad-based growth. Naturally, we always talk about macro mix and momentum. So the macro situation in UAE continues to be very, very positive. Lots more residents coming in, so lots more banking required. We've seen excellent growth on the SME side. 22,000 new accounts, 70% of them first-time set-up companies, as well as a very good broad-based growth in our developing corporate banking unit as well.
We haven't been talking this morning about two major announcements from this week. The expansion of DIFC, physical expansion, which will lead to the expansion of the number of people working and living in the area, and Dubai Silicon Oasis as well, both multi-billion dirham projects. When something like that starts happening, we start seeing contracts awarded, even just tenders going out, before we see spades in the ground. Do you see that reflected in customers, in lending, in accounts, in new businesses, services?
Yeah, so absolutely we do. So contracting is one of our fastest growing segments. You mentioned two very big projects, but if you just even look at the infrastructure spend that's happening on all the roads that you're seeing being built, all the other activity on construction going on, manufacturing, real estate, and data and AI centers. Naturally, the contracting business and gets the first dibs at it. And we definitely are seeing significant growth in that sector.
Well, let's have a look at where we've got growth within your portfolio at the moment. You mentioned the population there. We've got deposits up 18%, loans up 12%. What are you seeing in new customer acquisition in terms of whether it's coming from those new residents, churn from other banks? What's the percentage split?
So as I mentioned, on the SME side, naturally, which is where we lead, we are seeing almost 70% new business, 30% is churn. On the lending side, we are seeing a significant new demand from existing customers who are expanding. And as I mentioned last time, we're seeing a lot more SME focus on the UAE domestic economy as opposed to re-exporting and just using UAE as a trading hub. It's still there, but a much smaller mix of that. And then on the corporate side, bulk of the big firms are reasonably liquid, but there is some churn at the mid-market sector.
Well, at the same time as the amount that you are lending is rising, your credit quality improved in 2025. The impaired loans ratio down slightly, but the cost of risk really falling sharply. How are you increasing the amount that you're lending to companies and individuals, but also seeing less bad loans at the same time?
I think it's a function of the maturity of the economy, function of the economic cycle we are in. Actually, we're in a very benign credit environment. But I think it's also the function of a lot of the prudent regulation that has been put in terms of measuring affordability, prudent lending, not letting speculative lending happening in the market. And I think that's good. And if you think about bankruptcy regulation, the check bounce regulation, they all lead to customers being much more thoughtful, bank being more considerate on what they are lending. And when there is a problem or a short-term hiccup, more rooms to restructure and work with customers as opposed to the curtain dropping and you leaving the country.
How do you do that with new residences, though, new businesses? We've been speaking to the guys at the Credit Bureau about what they're setting up to deal with people who don't have a credit history here in the UAE. They're on it with their new apps and their new offerings. But how have you been doing it over the last year?
Yeah, so listen, we have been lending to SMEs for, I think, the longest of times, right? So we are celebrating our 50 years this year. So we have built a lot of external data points, right? So we consume a lot of data and we analyze it, and there is correlation, your social media presence, what type of website you have set up. These are all small little indicators which add up to give you a lot more information till the Credit Bureau history is built. Naturally, then we also look at sectors and the credibility of the business cases, especially when we are lending, to make sure that those are robust as well.
Well, let's look at your own earning and spending. Your non-interest income jumped nearly 30%. Your net interest margins came off from last year. We are seeing a lower interest rate environment. We'll get probably 2 cuts this year. How confident are you that your earnings can hold up if rates ease further? What are you doing?
Yeah, so if you think about 25, which was a 26% increase for us, very robust set of earnings, it came despite the interest rates being lower than where they were in 24 by 100 basis points. So we compensated that through 3 things. One was very robust balance sheet growth. Second was very strong fee income. So as you mentioned, our fee income grew by 29%. A lot of it is wealth, FX, corporate fees. So we have been diversifying the bank out of being majorly dependent on interest income. Given the growth in the economy this year, we feel that we should be able to absorb the interest rate cuts. We'd be very happy if it's too brandy, and I'll come and give you a gift if that happens.
Well, MBD's been factoring in 75 basis points, but I think even they are looking at that and lowering. Let's look at the digital usage of your customers, which is up quite considerably over the last year. What does that mean for you as a bank? Does it translate into lower operating costs, or does it translate into higher revenues?
I think a bit of both. But what we are doing is, so our logo is digital with a human touch, right? And I think while the day-to-day banking and a lot of convenience is going through digital, we had 59 million logins, right? So we're a small company, but it's a big number. But what we're doing is we are shifting our resources to advice, consultation, and financial planning, and also debt counseling and debt management, right? So where the value of a human conversation matters the most. So I see that as a big relationship builder. So I see it both as digital and human working together for us to get the right level of growth and the right level of customer stickiness and experience, which we are getting now very significantly.
30 seconds left with you. You're increasing your spend on tech. Where exactly is that spend going to go?
So a lot of it is on naturally new software. There's a lot of new regulatory things coming. Open finance is coming, which is going to be big. We launched Ani. We are about to launch Jevan with the domestic card. But we are also building a lot on the SME side. So for example, we are the only bank in the UAE where up to 4 directors, you can open an account digitally. So we continue to invest in that. We have continued to invest in digital e-invoicing. Our SME customers can now invoice and send a payment link all through the app and get the payment, track it, monitor it, look at where people haven't paid, all in the app. So it's more about building convenience. And the last thing I would say is that banking is starting to get, especially with open finance, it will start getting embedded outside banking apps. So we have to be there as well.
Thank you so much for joining us this morning, and thank you for being here. The Group CEO of RAKBANK, talking about their newly released earnings. Raheel Ahmed, thank you for your time.
Pleasure to be with you.